Welcome back to Office of Finance, where I help you take custody of your money and reach financial independence. In today's video, we're going to look at how you can invest $1,000 into various assets. Before we begin, make sure you hit that like button and subscribe for more videos like this. Also, check out my website and follow me on social media. The links are in the description below. Let's get started. The first thing you have to do is take a step back and look at your own financial situation. Do you have any debts? If so, how much and what types? You should also know your total income and expenses. The most common type of consumer debt are credit cards. These usually have an interest rate upwards of 18% or more. If you invest money into the stock market and receive the annual average rate of return of 8%, you're essentially losing 10% of your money to the high interest rate on your credit cards. Because of this, it might be better to put that $1,000 or at least part of it towards your high interest debt. If the debt or loan is between 3 to 5%, then investing might be the better option because the historic average in the stock market of 8% would result in you making money by investing this way. The next thing you can invest in is index funds. These are my favorite type of investments for a few reasons. First is that it's a great way to passively invest in the market. If you're the type of person who is pretty laid back and doesn't want to put in a whole bunch of time into your investments, then an index fund is likely the best choice for you. With index funds, you can set it and forget it. One index fund can contain dozens, hundreds, or thousands of individual companies to help diversify your portfolio. Contribute a consistent amount each month to build wealth. The third thing you can invest in are stocks. Owning stocks is essentially owning a small piece of the company you're invested in. Buying individual stocks can have the potential to outperform the overall market, but the opposite is also true. Picking stocks requires substantial research into the company's financials and fundamentals. Make sure you do your proper due diligence before investing in single stocks. There are typically two kinds of stocks, which are growth and dividend stocks. Companies that focus on growth can be more volatile, but the upside potential is great. Dividend stocks, on the other hand, are usually well-established companies with excess cash flow that they use to reward their shareholders in the form of dividends, which are paid out either once per month or per quarter. Another asset class you can buy into is cryptocurrency. Compared to the stock market, crypto generally carries more volatility, and many crypto assets can be considered highly speculative. Similar to individual stocks, make sure you do your research so you can know the types of crypto investments you're making. Personally, I don't own any cryptocurrency, but that may change in the future if I start learning more about that market. The last type of investment you can make with $1,000 is real estate. Understand that $1,000 isn't enough to buy a physical property. However, you can invest into real estate investment trust, or REITs. REITs have various types of exposure in the real estate market. These can include apartment buildings, offices, hotels, and more. REITs can be bought and sold on the stock market, just like any other publicly traded company, and the share price appreciates depending on the real estate market conditions. By putting your money into REIT, you're getting exposure into the real estate sector with a small amount of money and without the hassle of having to buy a physical property. Many REITs have an attractive dividend that's paid out monthly or each quarter. And that's 5 ways you can invest $1,000 today. Thanks for watching. Be sure to hit the like button and subscribe to the channel for more content like this. You can also visit my website where I post long-form, in-depth financial topics each week. Links are in the description below, and I'll see you in the next video.